Welcome back to Investing Talk Podcast. Today we're asking a big question about a company that's been, well, really making waves in telehealth. Is Hims & Hers Health a good time to buy now? We've gathered some pretty comprehensive sources, articles, research, notes to help you cut through the noise and really understand this company's potential. Before we dive into the details of our analysis, if you find this discussion helpful, please remember to subscribe, like, and maybe leave a comment. And hey, if there's a specific company you'd like us to look into, definitely let us know in the comments below.
Absolutely. We're going to unpack Hims and Hers from several angles today. We'll look at their financials, which are quite robust. They're standing in what's frankly a crowded market, what the charts might be signaling, and, the exciting but also sometimes challenging road that lies ahead for them. Our mission, really, is to give you a clear, well-informed picture.
Okay, let's start by looking under the hood then at the financial engine of Hims & Hers. Our sources point to some truly remarkable growth figures. They just jump out immediately. What's the story these numbers are telling us?
Well, what truly stands out right from the start is just the sheer pace of their expansion. So in Q1 2025, Hims & Hers reported revenue hitting $586 million. That's a whopping 111% increase year over year.
Wow, 111%.
Yeah, huge. And Q2 wasn't far behind either at $544.8 million, still up 73% year over year. But, it's not just that top-line growth. What's particularly insightful, I think, is that they were actually net income positive for both quarters. We're talking $49.5 million in Q1 and $42.5 million in Q2. So this isn't just growth, it's profitable growth.
That's a really impressive leap, isn't it? Moving from just growing revenue, which lots of tech companies do, to actually generating significant net income. What does that signal about their underlying business model, especially, for a company in such a high-growth sector?
Yeah, it tells a really powerful story about their increasing operational efficiency. I mean, a lot of high-growth telehealth companies, they struggle to convert subscriber expansion into, consistent profitability. Hims & Hers is showing that their profit margins aren't just growing, but actually accelerating as they scale up, which suggests, a unique ability to convert new subscribers into highly profitable segments. That kind of differentiates them from many tiers who might just be chasing those user numbers.
Right.
And that subscriber base itself, it's exploding. Reached 2.4 million in Q1 2025. That's a 38% jump year over year. That points to really strong customer acquisition and retention, which is absolutely crucial for a subscription model like theirs.
And to top it all off, they've raised their 2025 adjusted EBITDA guidance. It's now $295 to $335 million. That's a significant bump. How much of that confidence do you think is already baked into the current valuation? And I guess, how resilient is it to potential market shifts or maybe new competitive pressures?
That's a great question. It definitely speaks to management's increasing confidence in their operational efficiency and their profitability outlook. And if we connect this to the bigger picture, right, they're aiming for some really ambitious long-term growth. They're guiding for $6.5 billion in revenue and $1.3 billion adjusted EBITDA by 2030.
$6.5 billion by 2030.
Exactly. It's not just like an aspiration. It's a clear signal of significant operating leverage. Basically meaning as their subscriber base grows, their revenue scales much faster than their operating costs. And that leads to an amplified impact on profitability. For a knowledgeable investor, that's a key metric to watch. It really shows a mature approach to expansion.
Okay, so financially, the company seems to be in a very solid position. Impressive growth, profitability kicking in. But in this, let's face it, fiercely competitive telehealth arena, are these numbers built on a genuinely sustainable moat? Or could rivals maybe start to quickly erode that financial strength? Let's talk about their financial health, maybe beyond just the income statement, and then get into their competitive standing.
Right, good point. So our sources confirm Hims & Hers maintains a relatively low debt burden. They're not highly leveraged, according to their latest annual financials. They have positive operating cash flow, as you mentioned, with consistent improvement noted in shareholder letters.
Yeah.
All this indicates a very healthy financial foundation. There's really no evidence of liquidity stress or, urgent refinancing needs in any recent disclosures. For a growth company, having this strong balance sheet provides a lot of flexibility and resilience.
That definitely sounds like a strong foundation. But, for a high-growth company, some might argue that maybe a bit of strategic leverage could fuel even faster expansion.
Yeah.
Are there any indications from your sources that Hims & Hers might be, too conservative in its capital structure? Or is this maybe a calculated strength in what is a pretty volatile sector.
That's a valid point, actually. While some companies in this phase might take on more debt to accelerate things, Hims and Hers seems to be prioritizing more organic, internally funded growth and strategic partnerships. And this approach, as our sources suggest, is generally seen as a calculated strength. Their competitive advantages are quite clear. That rapid subscriber growth we talked about, a diversified product mix including pharmaceutical collaborations, diagnostics, preventative testing, and a very strong brand presence. They really distinguish themselves from other telehealth and online pharmacy platforms through that subscription-driven model and a really keen focus on personalized consumer health. That tends to foster sticky customer relationships.
And their long-term vision, you mentioned scaling to tens of millions of subscribers, broadening partnerships in the healthcare ecosystem. What stands out to you about that ambition, especially in such a dynamic sector? And maybe how realistic is it to hit tens of millions of subscribers? I mean, the market's only getting more crowded, right?
Yeah, that ambition directly addresses the whole can they sustain this pace question. And look, Hims and Hers isn't just resting on its laurels here. Their ability to innovate, like we saw with their personalized weight loss plans featuring GLP-1 medications, launched back in July 2025.
Right, the GLP-1s, big news.
Exactly. It shows they are actively expanding their offerings, staying relevant with evolving healthcare trends. This move significantly bolsters their reputation as a consumer health innovator, proving they can adapt and tap into new high-demand areas. It's really a strategy designed to make that tens of millions target more attainable by broadening their appeal way beyond their initial core offering.
Okay, so while Hims and Hers internal engine seems to be, well, firing on all cylinders, what about the external gauges? How's the market reacting to all these developments, and what are the charts signaling to investors? Let's shift our focus now to market sentiment and maybe the technical indicators.
Okay, technically speaking, the stock is in a pretty clear uptrend since early 2024. And that trajectory was really catalyzed by those strong revenue beats and the positive guidance they've been issuing.
Makes sense.
From our sources, major support seems to be identified near that $37 to $37 to $39.50 range. And overhead resistance looks to be around $44 to $45.50. Now, the RSI, the Relative Strength Index, is currently sitting in the 55 to 65 range.
Okay, so not overbought, not oversold.
Exactly. What's insightful here is that this suggests a pretty balanced market. It's not overheating, but importantly, it implies sustained investor interest without maybe the speculative froth we sometimes see in high-growth stocks. This kind of consolidation could actually be a healthy sign, building a base for the next leg up, assuming the fundamentals remain strong. And both the 50-day and 200-day simple moving averages are also trending upward, which sort of reinforces that positive momentum.
So that suggests the market is, by and large, kind of confirming the positive fundamentals we've been talking about. But beyond just the charts, what about the recent buzz? Q2 earnings beat the street forecasts. How are analysts and insiders reacting? What's the broader sentiment feel like?
Well, most coverage tends to be positive, unsurprisingly, given the impressive revenue growth and that move to profitability. However, you do see some analysts flagging valuation risks, which frankly is to be expected with a stock that's had such a strong run-up.
Right.
Regarding insider activity, looking at multiple Form 4 filings in May and June 2025, we see ongoing management and director share activity, but it's both sales and option exercises. So that means there isn't really a clear unidirectional trend of major insider buying or selling that would signal a definitive sentiment shift. It's mixed.
Okay, no strong signal there then.
Not really, no. Social media sentiment, generally positive, focuses on the rapid revenue growth, the platform expansion, but naturally you also see some concerns cropping up about competition and those long-term margins. So overall, it feels like a healthy dose of investor scrutiny alongside the enthusiasm, which honestly is often a sign of a maturing stock.
Okay, so with this strong performance and market interest, what's next for Hims and Hers? What are the key catalysts maybe that we should be watching for, short-term and long-term, that could significantly impact the stock's trajectory?
Right. So in the short term, the big one is the Q3 2025 earnings report. That's expected around November 4th. That'll be crucial for getting updated guidance and a clearer picture of their continued growth trajectory.
Okay, Q3 earnings. Got it.
We also have some anticipated ETF rebalancing for the Russell and S&P indices coming up on September 13th. That can sometimes cause short-term volatility, just something to be aware of. And then there's the announcement of their holiday health campaign, expected around October 22nd. That could potentially drive subscriber growth into year-end.
Interesting.
And, management consistently mentions continued expansion into new diagnostic and wellness categories. So that means new product launches or maybe collaborations could emerge really at any time.
And looking further out, what are the kind of big picture catalysts that could really define Hims and Hers' future?
Long term, it really comes back to those 2030 revenue targets,
Yeah.
at least $6.5 billion. That's immensely significant. They aren't just aspirational numbers. They imply a really multifaceted expansion, way beyond current core offerings, and a dramatic increase in market share. It suggests Hims and Hers sees itself as like a foundational player, not just a niche service in the future of healthcare.
Right, a much bigger vision.
Definitely. There's also ongoing speculation about broader healthcare partnerships, potential M&A activity, and rumors of new at-home diagnostic product launches. However, and this is important, it's vital to remember that regulatory changes in telehealth could also materially impact the entire sector. That could be a catalyst for some, maybe a headwind for others.
Okay, but every growth story has its challenges. And there's been news about a class action lawsuit. This sounds like a pretty significant development. What exactly does it allege, and what could it mean for the company and, for investors watching this?
Yeah, this is indeed a critical risk that really warrants close attention. News emerged back in August 2025 about this class action lawsuit. It alleges false or misleading statements regarding, and I'm quoting here, illegitimate knockoff versions of Wegovy.
Ah, okay. Targeting the GLP-1s again.
Exactly, and crucially, it also alleges risks to their partnership with Novo Nordisk, the original manufacturer. Now, this is significant because it directly challenges the legality and safety of their compounded GLP-1 offerings. It raises questions about regulatory compliance and, maybe more broadly, their relationships with the original drug manufacturers.
That sounds serious.
It is. The deadline for investors to join or serve as lead plaintiff was August 25th, 2025. So the legal uncertainty continues into September, and that's definitely contributing to some notable share price volatility. This is a significant stock-specific risk, alongside, the execution risk related to just managing that rapid growth, the evolving state and federal health regulations and telehealth, and of course the intense competitive pressure from both traditional healthcare incumbents and other digital health startups.
Right, lots to keep an eye on there. And beyond these company-specific issues, what about broader market risks? Things that could affect a telehealth leader like Hims and Hers?
Well, telehealth stocks, just by their nature, can be highly volatile, especially around earnings season or macro health policy updates. Macro risks like an economic slowdown, interest rate increases, or maybe changes in healthcare reimbursement policies, those could all negatively affect demand, particularly for elective wellness products and services. Or they could just impact investor sentiment towards growth stocks in general. So while the growth story is definitely compelling, investors need to be acutely aware of these potential headwinds and how they could specifically impact the demand for what Hims and Hers offers. Okay, so bringing it all together then. Hims and Hers presents a pretty compelling case overall. It earned a rating of 8 out of 10 from our sources. The rationale is powerfully built on that consistent, strong revenue growth and the demonstrated operating leverage we've seen in recent quarters. Add to that a solid balance sheet, positive cash flow, and those ambitious yet seemingly achievable long-term growth targets for 2030. And the technical indicators also seem to support an uptrend and moderate near-term upside if execution remains strong. That's a key caveat, obviously.
So for our listener asking, is now a good time to buy Hims and Hers? How do you synthesize all these factors? What's the actionable perspective here?
Well, while the risks are clearly present, notably in that regulatory and competitive sphere, and the ongoing legal challenges absolutely need very close monitoring, the investment horizon that seems best suited here is probably long-term. I mean, sure, short-term swings might offer trading opportunities, but the strongest thesis really emerges for investors focused on Hims and Hers' multi-year growth story, focusing on its platform scaling and its potential to evolve as, like we said, a foundational player within the broader healthcare sector. It's a company positioning itself not just for today's market, but really for the future landscape of consumer health.
So for Hims and Hers Health, it sounds like a mix of really exciting growth potential, but also some crucial challenges to navigate, suggesting it seems like perhaps a ride more suited for the long-term investor, focusing on that big picture vision and, crucially, their execution. Thank you for joining us for this discussion. We really hope you found these insights valuable. Don't forget to subscribe, like, and share your thoughts in the comments below, and definitely tell us which company you'd like us to discuss next. To leave you with a thought, in a rapidly evolving sector like telehealth, How much weight should investors place on a company's grand vision for, say, 2030 versus the daily headlines and the immediate legal battles that can really impact share price day to day? Something to think about. We'll see you next time.